From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 21st, 2017. Today we're going to take a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. What I want to do is look back in time. Sometimes the trend or the overall direction of a currency pair may be a little hard to distinguish. Sometimes it's going up, sometimes it's going down within a period, and it's a little hard to distinguish a real trend. Is it an uptrend? Is it a downtrend? And I would say, really, if we zoom it out a little bit here, clearly the trend above the blue trend line was up. That's an uptrend, not too hard to figure out. But inside the blue box up here, the top right hand corner of the chart, at the top of the blue trend line, we see congestion, we see uptrends, we see downtrends, we see more congestion, uptrends, downtrends, and even in the most recent week, zooming it back in, we've seen the market go down, we've seen the market go up. So what's the trend? Well, sometimes it's a little hard to distinguish in an overall trend pattern. But what we can do is look at historical price action and maybe give us a leg up on what we might expect from the market. The people that are in control of buying and selling and direction of the currency pair, most individual traders do not have any control over the direction a market goes in, whether it's a bullish or bearish move for the day. But what we can do is look at history and say, hey, this is what the market did the last time it was here, and potentially it does that again. Take a look at the black and the blue circle. Both of those periods, it got above the green zone, which I've highlighted with the black boxes as areas of congestion within this wider blue box range that we've talked about. The black boxes show congestion within the green zone at the resistance, blue zone at support. Well, there's a couple of times where the market jumped up above the green shaded area, touched the purple shaded area, pretty close to the 119 level, approaching 119, but touched the purple zone, found resistance, and turned around and went back down. So historical price action can potentially give us a clue to what we could expect today. I mean, if you look at the blue circle on the far left hand side, the market 3 days touched it and eventually went all the way back down to the blue zone. If you look at the black circle, same thing, touched it, went down to the blue zone, touched it, went all the way down here to the orange zone. So there's a couple of periods where it just touched for 3 or 4 days the purple zone and reversed and went back down. Now there's a couple of times, of course, here and here where it went a little bit higher, but take a look at the price action today and what we're seeing as it compares to the blue circle and the black circle is very, very similar. So that gives us a clue of, well, first off, what our risk is. Our risk, if we were to go short, is above the purple zone. We don't want to stay in it if it gets above that purple shaded area. However, I also would say that buying under the purple zone, if you were thinking about buying in the direction of the most recent 3 days going higher, doesn't seem logical either, because historical price action says there's a good chance that it finds resistance here and bounces back down. So buying right now, not really something that I would consider as long as it's under that purple shaded area, but more likely there is a potential opportunity for a intraday short here on the euro dollar. Let's take it down to the 4-hour time frame. Now that we've seen that history of price action, we look at the 4-hour time frame and take a look at what's happened over the past day or so, where the market has just kind of struggled to break above 118.85 or so. It's challenged it a number of times. Look at all these are 4-hour periods that have challenged the 118.80, 118.85, unable to push above it. So since it's been unable to push it above it, we may be looking for price action clues that tell us that maybe it's going to turn around and go back down at minimum to the green zone, if not all the way back down. Historically tells us the possibility is the blue zone way down here, and our risk is pretty easy. We don't want it to get above this. We want to see it stay underneath that if we're going to go short. Again, going long, history says unless it gets above that area, I don't really want to do that either. So at least at this point, I think the intraday wise, the best option is to wait for it to get above 118.85. That tells us it's going to go back up to the orange zone. If it gets below 1860, history says there's a good chance it's back down here to the green shaded area. So we're watching for clues. Take a look at this sudden infusion of sell orders. A sudden infusion of sell orders tells us that there are sell orders that are taking place here, or sellers that are trying to push it back down through 1860. So that's a good clue right there that we want to watch for the market to get under 1860. The potential is the next fall down. You know, we have some U.S. news coming up not too far from now. It's about 8 a.m. Eastern U.S. time right now. We have GDP data coming up in just about 30 minutes from now. If that's good news, we may see the market pressure back down towards the green zone or the blue zone, being watchful for the break above 1885 for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.